Good morning guys, this is Naim Aslam, Chief Market Analyst at AvaTrade. In our today's market segment, we will be focusing on coronavirus and the impact of coronavirus on markets. If we look at Asia, the dominant color was red, and Hang Seng Index was one of the major index among the Asian indices which have seen the most plunge. It was down nearly by 0.8%. Now the reason for the sell-off is because investors were anticipating some of the factories to reopen, but unfortunately the death toll, the number just keeps on increasing, and it is because of the virus, and it is near enough to touch that 1,000 mark. So factory owners and entrepreneurs are very much concerned about the impact on the human health. And because of this particular reason, they are not opening up factories. Now, obviously, the longer these factories are going to be closed, the more heavy impact it's going to be on the GDP. And, we are anticipating that the impact could be between 20 to 25 basis points in terms of global GDP during the first quarter. But if we see some sort of improvement in terms of opening rate of these factories, and if we see some of that production coming back in this particular week, then perhaps some of that impact could be changed. But if we see that the production is still very much on halt and nothing coming back in terms of a production, then unfortunately the impact or on the global GDP could be up to 50 basis points for the first quarter, and perhaps a little bit less for the second quarter, because obviously China is trying its best to contain that virus. In terms of economic numbers, we have some really important numbers out of China. The consumer prices have ticked higher, and that is primarily because of the coronavirus impact and the influence of that. And that was also produced its effect on the consumer producers price index as well. We've also seen that ticking higher. Over in Europe, the market reaction is pretty much mirroring what happened over in Asia. The sell-off has just literally, filtered into this particular European markets, and we're seeing all European markets trading to the downside. And the only index that I see is the volatility index for the Euro Stoxx 50, which is trading to the upside. And that means that the volatility index for the S&P 500 index, when the US markets will open, will also trade to the upside as well. In terms of any other economic numbers, we don't really have that, but I think the influence or the focal point for traders remain that, okay, when those factories are going to be open, when we're going to see those factories back in the production, and then we see some sort of more optimism coming from that particular side. And to finish off, in the commodity space, oil is, once again, it has broken that level of 50. Remember, we discussed that several times in several of our previous videos. Now, my forecast is that the prices for crude, especially, they're going to continue to move to the downside. Perhaps 48 is the next support level, so keep an eye on that. We've also done a special technical analysis on Apple, because Apple stock is going to be influenced when the US markets will start trading, because Foxconn, which is one of the major producer of iPhone, is still not back. The factories are still not back in production. And that is going to influence the manufacturing numbers. That will eventually have an impact on the revenue, and of course investors not going to be happy, because earning per shares are going to be influenced because of these particular factors. That's all for today. Speak to you guys tomorrow, and happy trading.